Hi, my name is Summer Olmstead, and this is my final for Introduction to Machine Learning. And my project is about a LSTM model on stock prediction for the Nvidia stock. And some background into why I decided to do this project was because for Nvidia, it is one of the most rapid growing stocks as of lately because of their advanced graphics processing unit chips, and a lot of their software is being used on the development of a lot of the groundbreaking AI going on currently. So that is why I decided to do my project on this. Just out of curiosity to see if we can have an accurate stock prediction. So yeah, let's just get into it. I first found the data from Yahoo Finance and I downloaded the CSV file from the past 5 years, as you can see from this link, and then I imported it to my Google Drive. So yeah, we're just gonna read this using the Pandas library and take it in. And this is just a general look of the data since um, 2019. And I will say I collected this data whenever I started this project on April 15th, 2024. And it roughly begins about 5 years from the date I collected the data. So the data, whenever we begin data cleaning, has no missing values as the stock market is reported all of its statistics and analysis in the historical data as it's open every day. It's never not reported any of the NAN values. So that's how you can see it's very full. Some background on some of the stock information is that the open is the opening price of the day, the high and low is the higher and lowest prices of that day, the close price is the closing price for that day, the volume is the amount of people partaking in that stock at that moment, trading on that particular day or have a stock in that day. Um, the adjusted close price is the price of a stock after it has been adjusted for dividend payouts to the investors, etc. So yeah, I decided to make my model more reliable for it to capture distinct trends and patterns in the data by having the moving average added onto my data frame. And this is just calculating the average within the previous 10 days of the stock. So as you can see here, we now added it, but whenever we show off the head of the data for the first 15 values, just to show this, we see that we have 10 NAND values in the first initial 10 values. And that is because, of course, that we cannot take an average of 10 before having those 10 first initialized. So we will end up doing a data cleaning here for backward fill to show to put these values just to be full so we don't have any errors whilst working with the data in a minute. So as you can see before, though, we had just look if there's any missing values. There were none besides the moving average. So we just specifically filled the missing average out of the data frame with a limit of 10 because everything else should be fine. It was just those first initial 10. And yeah, we can see that it fixed it. And now whenever we look, it was all filled. So this is great. And you can also see that in the end, the moving average is more reflective of the averages within those 10 days. And that's how all of them would be after those first initial 10, I would like to note. So yeah, now let's get into building our LSTM model. So I decided to have a 90-day for my window size because we will be predicting 90 days in advance. Therefore, it only makes sense to train the model on the sequence of recognizing and capturing patterns of 90 days to be able to predict this. So we're training our model on the sequence for not every 90 days to do the next predictions. So yeah, we first scale in our data frame the open price, the volume of the stock, and the moving average. And we're doing this because these are the features we're inputting into the model. And we also need to normalize it because these are out of different units per se. Like open price and the moving average general price is both in the same unit, but volume is a whole number and it relates more to the amount of people partaking. It's not necessarily correlated, but it also does give indicators. So in general, it's always good to normalize your data before inputting it. So then we do the sequences. And I decided to do a train ratio, a validation ratio, and a test ratio. So I have a 60-20-20 here. And we do this because initially I just did a training and test ratio, but I found that it didn't quite make the data, the model as reliable. And this was more just because the validation really added also as well how well the data is performing in general. So yeah, then I ended up doing the training and testing splicing before putting into the model. Then we reshape it to have the correct size. Then we load the data in before we do this model. Here's the architecture of the model. It takes the inputs of input size, hidden size, number of layers, and output size. And this is a very standard approach for making an LSTM model here. What's interesting to note commenting on this is the hyperparameters I chose for my model, which is I have the input size 3 and output size is 3. And this is because, of course, we want to see how these predictions line up for the main reasons of the open price volume and the moving average. And also, I did initially do this in the trial and errors of composing this data in the model. I first did this with only one feature of open price because I was just curious about the price, but I found that not having other features and seeing how they correlate within each other in the model itself, the prediction is not as accurate. Now, so I have the hidden size of 64. I thought it was generally good. And I also had done a grid search on the first input whenever I first did my attempts at this, and 64 seemed appropriate just working with this data and everything. It's roughly about 1,200 days of data in the 5-year time frame. So that was just kind of stuff that worked in general. And then we just have 2 layers. It was fine. And then I also found the learning rate of 0.01 worked good. And I did use the mean squared error loss to calculate that. And we also used the atom optimizer for the math. So now I do my training loop here. And in my training loop, I essentially um, am doing 100 epochs and yeah, I mean, it's just simple training here, and then we do validation as well. And then we're evaluating and we see. And then I like to do a graph here just to showcase it. This is all of the data. We can go look at it here. You can see how the trends over time, but I want to capture these trends of how the model is being trained by putting them into a graph. So here we have a training loss over time. So generally, you can see the patterns in this is whenever it's first getting trained the model in the beginning epochs, it's not that great in comparison, but then it averages out to this steady 0.00 to like 0.01 loss around our average, like oscillating against that range. And then for the validation loss, we can see that generally throughout it you can see that it has kind of the same pattern as shown in the training loss. So yeah, I mean yeah. So then we just get our test loss printed out and we have a rate of 0.01. So that's fair. I also will mention every time you do run this code, the training is different. So then the predictions of the model changes, but I'll go into more of that later. But okay, so now we're going to start the prediction here. This is just going to see how the prediction lines up with the actual data for the first 5 years, what we're first going to be looking at. Very simple. We're just going to scale our data again. Then we're gonna make the sequence for it going to predict. Then we turn on our model to evaluate. Then we just look at all of them. So first we have our actual versus predicted open prices. And um, here you can generally see that it's very close. The only issue is more towards the end of the data. It doesn't predict it to be as high as it does end up. And this is fine. Also the stock market, if there is different news going on about the stock, it could impact investors to invest more, of course. And then we have our predicted volume line. From this, you can see generally that throughout the timeline, it's kind of hard to predict volume as, you know, and whenever it just comes to stocks in general, a person might see, oh wow, the stock is really high today. I'm going to invest, and or people freak out if it drops suddenly. So a lot of people just drop the stock. So this kind of shows also this you could just see with the exaggeration of the data by seeing a lot of these super high stagnated points. But the predicted line you can see is generally not as exaggerated as the real data actually is. It's more tame, but that's fine. So now we're going to look at the predicted moving average. And like I said earlier, with the open prices graph as well, it doesn't quite predict for it to skyrocket as high as it does in real life. And I think it's because generally earlier in the data, it was very steady and slow growth. And then out of nowhere, it really took off. So I think that is what's reflected of what the trends being captured in the data are. And it was just not expecting and anticipating this. So yeah. So into the future, I will say I had ran this, and this is not my initial one, but I'll show you this on this one really quick. But then I'll show you what my actual better model I had done was, and the code is very similar to this. We're just going to add an extra sequence to actually start predicting here is what this code does. It just takes in the last 90 days of the actual data from real life. So the 90 days before I had cultivated this data on April 15th, 2024. And it's essentially just putting that to input into the model to make real life, real-time predictions. So yeah, here it shows a very big drop here, but this is not one of the better runs, I will say, of this model in particular. I happen to not save my better results, which is on my part, but I do have it on my paper I will showcase in a minute. But this one is just predicting a very staggering drop, and it could just be thinking from it might level out like it did here. As you can see, it went up, then it went back down, and it could be predicting that it might have that same pattern of going up and back down. Um, Over here, it generally thinks that the volume will be increasing a bit over the next 90 days. So this is July at the endpoints, just to specify right here. And then we have this again, and it's kind of the same trend. It's very close to the open predict. But yeah, here is this. Well, now I'll jump over to this tab to show my paper written on this. And I really want to just show this to show my first run where it was very successful. I just wish I had saved a specific copy to show the code reflect in that. But it had a very high and successful training. And that happens sometimes whenever you run code for training. It's going to be different every time, the loss and the predictions and everything. So this just happened to be a really good run on whenever I had did this. But yeah, so this was pictures I had taken whenever I was writing the paper. Um, and you can see that this is what it generally looked like during the training and loss. And then you can see this is very similar pretty much to what I showed whenever we are looking at the actual and predicted from the past 5 years. But this is where I think the predictions are actually more accurate. I'll zoom in here to showcase this. So yeah, as you can see here, the at figure 6, this is the actual versus predicted for open prices for the next 90 days. It's a very more stable prediction, I would say, than the one that the model is currently outputting. And I think that this is more reliable in general, what this model's output was. And you can see that it really just is a small downturn, which is fine because it's currently the model is at the highest it's ever been whenever we did this data. So it's not extremely weird to see that it's going back down because it probably thinks that it's normal to go back down after a certain point, you know? Even though in real life we might be looking at it and be like, "Oh wow, Nvidia just released that they're going to be working with Tesla," I believe I saw 2 days ago in the news or something like that, for their chips and everything like that. And that's going to cause one of the driving factors for it to increase still to this day. But the model doesn't know that. And we'll get into more of that later. So now looking at it, we see that the volume was predicted to kind of stay roughly the same. It wasn't really sure. And then this is also another downturn on that same, it looks very similar to this. But yeah, it was actually extremely close to the real line, the moving average, funnily enough. But, yeah, it actually looks almost like it is the same line, but it just has this prediction of going downward. And we can only ever compare this model to the real data whenever it is July of this year. So we can only see how well this model holds up. And as of today, I believe, looking at the stock market, it is increasing, but it did start to have a downwards for about a few days. I want to say like a few days ago, it dropped down to like 700 and everything. So I mean, this was kind of fairly accurate. It did kind of drop down to like 700 something, um, like shortly after this part. But it recently is increasing back to 800 today on April 25th, 2004, 24, because of the news released about how they're expected to expand a lot. So, yeah, I mean, I can also show the this is actually, I did find the code where, in an old revision, that it did have this, specific output. I can't replicate it sadly enough, but, you can see that it did come out from my model at a certain point, which it shows this, actual versus predicted, open prices, and it's the same that I showed on my paper. But yeah, this is generally the look of it where it has this predicted downward term. So, some things I do want to mention about what would help this model in general for future work as well is that if we somehow implemented more features of current time, that in real life does actually affect stocks often, like if we did a lot of economic indicator features such as government spending, if we put that on a scale to show the import, like the effect onto the model, because from an economic standpoint, government spending could have the adverse effect as everything is affected in the economy to potentially change the investment. Or a great important thing is if the interest rate increase, if that was reflected in the model, it's often looked at that the interest rate in an investment is an inverse relationship. So if the uh, interest rate increase, the investment would likely decrease. Therefore, how would that reflect onto the stock prediction? And stuff like that is generally what we would want to in the future to add to this model. It would definitely need more factors to see and understand the bigger picture of what's going on in the stock market and what's going on in investors' minds. I think also if there's a possibility to implement a feature such as I suppose like what the news impact or what the general public are feeling about the stock and company in general, um, that would be a great indicator too if it were to increase. Like, let's say because of the news of them investing with Tesla and working with them because Tesla's going to use their products for their car, I suppose, then that would be extremely important to put into the model and factor that in because that would drive investors to want to put more into it and drive the price up. So that is another thing. Let's see. But yeah, just going back to the general idea of the whole thing is that the implications of this data um, and getting this data is that we could do a lot with it. Obviously, this would be great for investors if this prediction was extremely accurate. It would probably be a very profitable product, but also um it is extremely hard because the stock market in general is very risky. And there's a lot of factors going into it. But also, this model can just generally show the well-being of a company over time and predict its trends over time as well, because the stock also reflects on how well the company is doing generally, is another indicator it can give. And yeah, so definitely more implications in making the future work for this project would be just making more stocks included and also just doing it on other stocks to see how those predictions line up. Would say that this would probably be easier to predict if there was like a steady stock such as the S&P 500. I mean, that's generally always a linear upward trend. So, I mean, that would be easier to predict. And also, stocks that have multiple years of history. If there's been a stock on the market for like 20 years, then that would be way easier to predict than Nvidia, because Nvidia has probably been on the market less than 10 years, I believe, whenever I was collecting the data. One of the bigger options to pick it was 5 on Yahoo Finance that does do all of the collecting of the data over time. So yeah, um, and that was my general project, and I was so happy to give an overview about it today. I hope you enjoyed watching, and I would like to give acknowledgement and thanks to my professor. Thank you so much. Have a great day. Thank you for watching today.